Initially, we were going to be joined by another who unfortunately has fallen ill, so it's just going to be the two of us. And I will welcome James to the stage. At least I hope I'm going to welcome James to the stage. There he is. Otherwise, we're going to have a monologue conversation.
Yeah.
And I'm Zachary Karabell. I'm the head of global strategies at a company called Envestnet, which does transactions, financial transactions, payments. So we were talking a bit about that. So welcome to our afternoon discussion. We're going to talk a little bit about Stripe and how it has become what it has become in the time that it has become it. And then we're going to expand the aperture a little bit and talk about the world as we see it, particularly in terms of the role of technology and disruption in financial services, which I think both James and I have thought a good bit about over the years and are thinking about a good bit about now. Must have been something we said or haven't yet to have said. So James, Stripe is, 9 years old? You've been there for 4 years, and in the hyperloop of business and technology, that can seem old, but you've grown incredibly quickly. Just tell us a little bit about Stripe, what it is, and why it's taken off so much.
Sure. Stripe was started in 2011. And I've been with the company for about 4 years. I set up our UK business and our London office, and I'm now based in New York and setting up our presence for the East Coast. So Stripe is really a platform that allows anyone to start, scale, and grow their company online. We're really thinking about it in terms of like the infrastructure for commerce online. And so really it came about by virtue of the fact that John and Patrick, the two founders, who are brothers, they're developers by trade, and whenever it came to integrating payments into whatever they were working on, it was always the most painful part of the experience. Difficult to get up and running, not very developer-friendly, and so really the idea came about by virtue of the fact that seems like a pretty important thing that needed fixing, right? Every single business needs to take revenue and transact. And so they set about building a set of tools that were developer-friendly, that allowed developers to integrate payments into whatever they were working on and help entrepreneurs start companies.
So this is, it's one of these good storied stories, right? There was a period at Y Combinator, and then there was funding from Andreessen Horowitz and a series of other luminary venture capital. Do you think, and this is obviously a challenging question, do you think that was luck of the draw, and that if you get on the right path and you get the right funding at the right time, you have a nice head start? Or do you think there's something about the technology and the culture and the services that is so particularly unique, not supposed to modify unique, but that is so unique to Stripe that's why it's done so well?
I think there was a real gap in the market at the time we started, which was around this kind of developer-friendly approach. And so that is where we found the most product market fit. And so I think by virtue of that, there's always an element of timing, but really focusing on building the most developer-friendly product possible was where we kind of got that initial growth. And I think it's been interesting that how much that word of mouth from developers to other developers around how great the product is to work with has really driven a lot of our growth organically. So as with any startup, there's an element of timing and luck, but I also think that we hit upon something that didn't exist before that was in demand.
So will Stripe, as you continue to grow, and you are growing pretty quickly still, right, is the pathway to just continue to be this open source, open API for the developer community as it plugs into, I guess, almost any business, right? Whether it's consumer, industrial, you name it. Or will you eventually develop more of a consumer presence?
Our focus is very much on kind of a platform approach. So we very much view it as enabling other companies to accept payments online. We think a lot of the reason that that's an interesting problem to work on is because it's largely unsolved. Today, less than 5% of consumer spending happens online. And even in more kind of internet-enabled advanced economies, that's still only around 10%. And so we think that's a problem with like the tooling and the access to the underlying systems. And so we very much view it as like we can build a platform that allows companies to bring more commerce online and kind of grow the GDP of the internet. And so by virtue of that, we're much more focused on the kind of B2B and building those tools to enable companies to build great consumer experiences on top of Stripe rather than going directly to consumers, because I think it's more impactful to do it through other companies and brands.
I mean, it's a really important point, by the way. I mean, for all that, particularly these kind of audiences, are aware of just how big something like Amazon is, right? It's a huge portion of online spending, but it is still a relatively tiny portion of actual consumer spending, even though it occupies massive mind share.
Exactly. And then if you cut it by online versus offline, online is still only 5 to 10%, no matter what market or where in the world you are. And so we can argue about whether that's going to be 20 or 40 or 80% in the future, but it's going to be more than 5 to 10%, right? And so I think that's the really interesting thing about this market and the tooling that we make, is that it helps move that 5 to closer to 100.
And is that true only for Stripe of facilitating goods payments, or is it also more and more true of service payments?
Yeah, it's across the board. So really, the product can be used to accept payments for pretty much anything. And the types of merchants we have are, as you would expect, e-commerce, but a lot of subscription-type companies, both physical goods and SaaS products. And then we work with a lot of marketplaces, so a lot of on-demand companies like Lyft, for example, uses us to manage all their pay-ins and then payouts to all the drivers. And so we think it's interesting working in that space where there's more innovative business models going on, because those are the ones that are converting more of the offline spend into online spend. If you think of a Lyft or an Uber, for example, those are all transactions that either would have been done in cash or wouldn't have been done at all before something like Stripe was around to move that online. And so when we talk about shifting the GDP of the internet, it's exactly those kind of conversions and those sort of business models that make a large impact on that.
And do you find, as the company grows, and I mean, I'm not sure, how many people work at Stripe now?
We're around 1,000 people now.
So does that, what's the tipping point of we're total startup, aggressive culture, and we're now a lot of people? And when does that start affecting it?
It's a very complicated question. I think it very much depends on less the number of people or any particular metric like that. It's really the approach you take to growing the company and building your product out. And I think that very much varies depending on the type of company and the culture and what you're working on and who your customers are. So it's a difficult one to answer, but we try and grow in a kind of as scrappy a way as we can and maintain openness to a lot of different opportunities that are out there.
So, one question we talked about is when you find an area of the market that's underserved, right, and in Stripe particularly, more open source, developer friendly. I mean, that's an accurate way of putting it, right? When it comes to this burgeoning world of mobile payments, there's the question of first mover advantage. Is this a winner take all market, or are you really just trying to be an important player where you think there's going to be a lot of different competitors?
Yeah, that's a great question. So I think by virtue of the size and the growth of the market, there's going to be a lot of players getting involved. I don't really view it as a winner-takes-all type of market, just because there's such diversity in the kind of needs and requirements of lots of different companies, and then you add on top of that the kind of geographical complexity of operating globally, and it doesn't really have the market structure that you would require to have a kind of winner-takes-all market. So I don't think it's that. I do think there are certain benefits to scale in terms of processing payments, and also just the amount of data you get when you have a large number of merchants. For example, we have a fraud screening product called Stripe Radar. It takes in thousands of data points per transaction, but it also screens across all of the transactions that we see. And so really the benefits of that increase exponentially with the amount of scale we have. And that last year prevented $4 billion of fraud for our users, so real tangible benefits there. I'd say how we fit into that, aside from the kind of emphasis on developer friendliness, is really around taking more of a platform approach. So there's a lot of parts of the market where maybe you're not a developer, but you need to accept payments, and that's where we really like to look at it as more of a platform for other companies to build on top of, as I mentioned. So a good example of that is Shopify. We work very closely with them. We power Shopify payments, and that allows us to reach a segment of kind of individual small business owners that aren't particularly technical but do want to sell online that we wouldn't otherwise be able to reach directly. And so taking that platform approach, I think, is pretty differentiated in the market. Usually most other people are going direct to merchants in a specific vertical or country.
So one more specific Stripe question, and then we can have a brief rumination about the big picture. There's a lot, obviously, of concern about data privacy, data security, who uses it for what. That's clearly changing significantly in the European Union with new data rules coming in this month, and there will probably be some similar equivalents in the United States, although who knows what. How do you approach the whole data privacy issue, particularly when, obviously, payments and that information is amongst the most sensitive?
Yeah, that's a great question. So I think I'd say two things on this. One, we generally think it's a good trend that things like GDPR and other kind of regulation like that are coming in and standardizing, at least on a regional basis. And I can see that converging more as it becomes more of a kind of topic that people are very passionate about. And so I think that's good. That makes it easier to understand the obligations both of individuals and of businesses, and also makes it easier to transact cross-border, because if it's on a more regional basis, then that's easier to kind of make sure that you're compliant. The other thing I'd say is, if you look at the companies that have had data breaches or things like that, it's often companies where their core competency is not managing data. They're a retailer or they run some other type of business. And so I also see a move where a lot of companies more actively kind of move that into companies that do specialize in it. Stripe's a good example of that. Security is really built into the core of the product and very important for how it functions. And so I think, again, you'll see a trend where companies are kind of making sure that they're compliant by using third parties rather than trying to manage things themselves as they've done in the past.
And does the right to be forgotten impinge in your model at all, or no?
Not particularly, because we don't deal with a lot of very direct-to-consumer relationships.
Right, that's the companies that have to deal with that.
Yeah.
So on the big picture thing, we were talking before, one debatable but observation about financial services, of which Stripe is within that ecosystem, and I've certainly been playing around that, is of all the industries that all of you can think of and will float around here, financial services are amongst the least disrupted, in that in the developed world in particular, you still have some very large banks that control the deposits. They become the source of a lot of other structures, and a lot of the innovations that occur within it occur on the margins. You do mobile banking rather than going into a branch, but the nature of that service and that transaction hasn't changed fundamentally. Do you see that actually changing at any point in the next X? I mean, it's radically changing in a place like China, which didn't have incumbent infrastructure. But do you see that changing at all in the near future in the developed world?
Yeah, I do see that changing. I think you're right in that a lot of the innovation that's happened to date has been on the kind of like access and the front end to the systems, not the underlying systems.
Right, the user interface, if a
Exactly.
branch is a user interface, so is a mobile device. That has changed, but the infrastructure hasn't.
Yeah, exactly. And I think we're in an interesting world at the moment where you have a set of more developed countries, the US and Europe, where there's very developed underlying infrastructure, and so the innovation that's going to happen in there is going to be different from in more developing markets where this is being built from the first time from scratch. And so I think over the next 5 to 10 years, it will probably take longer than people think. We're going to see those kind of two different systems emerging and then trying to converge with each other, which presents also some interesting opportunities for anyone who can bridge that kind of bridge all of those systems and create a consistent experience for developers and for consumers.
I mean, it's funny. It'll be interesting to see, and we have to wrap up now, what the arc of Stripe is over the next decade. I mean, if it goes public or if it gets bought by something like Visa or PayPal or a bank versus becoming its own independent force, that too, kind of answers some of that question. If it gets embedded in some legacy player, it becomes much more part of that infrastructure. If it doesn't, perhaps it becomes part of the disruption and the change within that industry.
Exactly, and we very much view ourselves as the layer that unites a lot of these underlying systems. And so if there's developments and innovation in the underlying system, we view that as a good thing, right? That increases the amount of functionality and scope of our services.
Anyway, it's been great to have a conversation with you. It's good to know that my payment for this service will be facilitated by Stripe.
Glad to hear that.
It's good that you transact free as well, so that's a good thing. Thank you all for joining us today.
Thank you.